Hello everyone, today we will be looking at the euro and British pound market. Let's start by looking at the institutional positions on what the hedge funds or banks are doing. These are large speculators in the markets. We will start by looking at the US dollar. The new monthly candle has just opened. Looking at the institutions' positions in the previous month, they were very bullish. They increased their net positions with 346%. If we can look at the coloration of the longs positions, the sells are becoming more bluish, meaning they are focusing on longs. The shorts positions are white, meaning they just neutral. They not adding nor closing shorts, they just neutral. Since the institutions are still bullish, it means we should be focusing on looking for longs. Looking at the net positions graph from January, we can see that the institutions went bullish till September. Then they took some profits. Now from December, we can see that they are resuming the accumulation of longs. If you would like to have this report for free, please subscribe and leave a comment saying, "Can I have the report?" I will then send you a link to my free Telegram group where I also share my trades. Now, let us look at the chart. We will start on the weekly chart. I will be analyzing the charts using the Malaysian S and R strategy. Monthly and weekly storyline is bullish, agreeing with the positions of the institutions. Right now, price is reacting in this open and close weekly S and R level. If price will continue from this weekly S and R, usually the target should be the next weekly S and R level, which is this V-shape S and R level. Remember that a rejection is not confirmed until a candle closes. After this weekly candle closes, we should see a daily breakout, or at least a daily support level created. Now, let us drop down to the daily chart. As we can see, a daily support, which is a traditional S and R level, has been created. But buying from this level while the weekly candle is still running is risky because the weekly S and R has not been confirmed. If price can break this daily S and R obstacle, that would confirm a weekly bullish storyline that is in play. Let us not forget that this week is an NFP week. It's advisable to not trade during this week so that we can see if price confirms our bias or not. Also, on Friday afternoon, we will look at the new COT data report if the institutions maintain their bullish bias. Since we clear with the US dollar bias, let us look at the dollar pairs, starting with British pound. The institutions are not very clear on pound on whether they are bullish or bearish. But yes, they're slowly moving to the bearish side because if we can look at few months back, they were 73% long and 26% short. But now they are 57% long and 43% short. That is a 16% decrease of longs, which means they are moving on the short side of the British pound, although they not aggressive with it. If we can look at the graph since July, they started decreasing their net longs, confirming the US dollar strength. Now let us go to the chart to look for sells. Remember, we should always buy when the institutions are buying and sell when they are selling. We never want to go against them. Just like in the dollar index, the pound is rejecting the weekly S&R, and the next target would be 1.22268 level, which is the next nearest weekly S&R. That is 150 pips. Let us drop down to the daily chart. On the daily chart, pound is already breaking the daily obstacle, unlike in the DXY. This is showing some strength in the US dollar. Now let us look at the euro. The institutions are very clear on the euro. Look at the coloration cells of the shorts. They are green, but look at the longs. They are neutral, which means they are focusing on the short side. Looking at the graph, the institutions were very aggressive with their shorts on the euro compared with the pound. Look at this aggressive drop, even going below the zero line. Now, let us go in the chart. Like the others, euro is also rejecting the weekly S&R, and the next weekly S&R is a range of 240 pips, which is a very good range. Now, dropping to the daily chart, the euro has not even touched the daily obstacle yet, which is why it's very important to wait for candle closures to confirm your bias. That's it for today. If you would like to have the COT report that I am using in this video for free, subscribe to the channel and comment and say, "Can I have the report?" I will then send you a link to my free Telegram channel where you will also get my free signals if I take any trades.